Hello and welcome to the Cryptocurrency News Channel. This is the TAFA and chart analysis for February 14th, 2022. Now, we actually have a lot to discuss because basically Bitcoin did not dip over the weekend and did not dip today. Some people, including myself, thought it would because of the Fed meeting. It wasn't one of the FOMC meetings on the calendar, but it wasn't really an FOMC meeting. A lot of people were afraid of an inter-meeting rate hike, but that did not happen. However, we need to be prepared for mid-March. March 15th, 16th is the next FOMC meeting. And what happens then is they're going to determine how much they're going to hike rates. It's pretty much 100% positive that they're going to hike rates. The question is, are they going to hike rates to 25 basis points or 50 basis points? The head of the St. Louis Fed actually said they should hike it 50 basis points. I happen to agree with them. I think we should hike it 50 basis points because inflation is kind of out of control right now, and we need to rein it back, and tightening the money supply is one of the best ways to actually rein in inflation. But a rate hike of 50 basis points will be a little bit of a shock because I think the market has priced in about 25 basis points because everyone and their mom expects the rates to go up. No one expects the rates to actually stay still. And because everyone and their mother expects the rates to actually go up, they're probably going to go up. I mean, they're definitely going to go up, but if they go up by 50, that's a little bit more than most people expected. So I do believe the market will actually dip mid-March if they do that. We also might be a little bit bearish heading into mid-March because of the expected rate hike. Now, they definitely need to do it. If the Fed pussies out and basically does not raise inflation rates and just keeps tapering, then I will be kind of upset because that just sets us up for more pain later. But right now, yes, if we were waiting to DCA in, we're still pretty much at the same price we were. It's going up right now, but like we're pretty much at the same price we were basically before the weekend. We were like 43.5 maybe, so you didn't really lose much by if you sold last weekend and bought back in right now. It's about the same. Most of the coins are about the same price as well. So if you're planning to DCA, if you're planning to buy, now's a much better time than last Friday to actually buy in because that scare is over. However, if you really want to be safe, maybe wait until after March 15th to 16th. But that's another month, and if you don't want to wait that long, DCAing right now or buying in right now is perfectly fine because tomorrow might actually be positive because they didn't do the inter-meeting rate hike. However, there is another black swan event, that being Russia and Ukraine. And that could be very, very bad. Some people think they will actually invade on Wednesday. I don't really think that. I think Vladimir Putin is mainly just bluffing and he won't attack. He's trying to get some concessions from the West, and Ukraine is willing to make some concessions too. Not so much territorial, but maybe removal of weapons. Remember, the original agreement was like Ukraine gives all its nukes back to Russia once the Soviet Union dissolved. They already did that years ago. The Crimea thing put everyone on edge. So now people definitely have more heightened tensions. But Ukraine does seem like it wants to find a diplomatic resolution with Vladimir Putin. So hopefully that will actually resolve. If Russia does attack Ukraine, you can expect a really, really large drop. We're talking 30, maybe 30K or even less. You can also expect inflation to go up because of energy prices, and pretty much supply lines will be even more trounced than they are now. So going back to the technical analysis. If you actually look at the graph right now, essentially, yes, I think we are slightly more up than where we were over this weekend. You can see like before this weekend, we were, actually no, we're slightly down from where we were before this weekend. We were on the 12th or so right here. And like coming into this weekend, we were all the way up at 43.9 and now we're going up, but we're only at 43.0. So right now, like our bottom is still a little bit lower than where we were before. If you just keep on looking at it, definitely coming back down. So if you look at the overall graph for the week to week, we are still down, but I think we might have actually hit a bottom. As you can see, like the bottom's basically pretty much evened out from the 12th or so. We didn't really go down because of that. The last chance we were going to go down, like I think was essentially, outside the Black Swan event, was essentially the Fed meeting, and the Fed meeting came and went, and I think we're actually going back up. Unless Russia attacks, I do think we are actually probably positive for the next day or two because I don't really see anything else that would actually make it negative. Of course, you got to watch the Asian markets and see how they're doing because all the stock markets actually have some effect on crypto as well. Asia's slightly down right now, but not really that down, so I think we're okay. And the pre-market, we're actually like even or slightly up, especially the NASDAQ future. Like I said, I think we're going to be a little bit up the next day or two, but I wouldn't expect too much. I really hope we just basically go way, way up and get above 50,000, but I think the chance of that happening is fairly small. I don't really see a big bullish marker or a big bullish event anytime in the future. I wish I was wrong, and if I see it, I will tell you guys, but I don't really see it right now. So if you actually look at the price right now, yes, we're down from our high, but we're catching up pretty fast, and the scale is and honestly, the scale is not really, the scale isn't really that big. It's only a couple thousand points, and the bottoms have actually bottomed out. We're now at 43.3. We could break 44 basically tonight, and that would be pretty cool. So essentially right now, as you can see right now, we're at 43.4 now because it's gone up as I'm doing this video. So the exponential moving average and the simple moving average, those would actually both be buy right now based on where they are right now. So we're buy all the way down to the 50. So the next 2 or 3 days, maybe for the rest of this week, unless Russia attacks Ukraine, I do actually believe that we will actually be going up for the next couple of days unless Russia attacks Ukraine. Basically, everything on the oscillators is pretty much neutral. It's more buy because both momentum and MACD are buy. So if you're looking for short-term gains, now's actually a pretty good time to buy. Wouldn't really hold my breath for the long term, though. On the weekly, I do actually believe that we actually have a simple moving average buy on the 10. However, we probably will have an exponential moving average buy on the 10 by tonight. The 20 is still a bit of ways away. If we can actually start flipping the 20 and the 30, then that brings us into a whole new ball game. But we would actually need to get above 46, 40,000, 47. If we go above 50,000, all this becomes positive, and that's a true bullish signal. All the oscillators are pretty much neutral. I definitely wouldn't buy for multiple weeks right now because we do have March coming up, and we don't really know how much the Fed is going to raise interest rates by. On the monthly, we still haven't moved. We haven't flipped the 10 yet, but we're pretty close. If we go up maybe like another 10, 15,000 points, we can actually flip the simple moving average and the exponential moving average. That's what I'm kind of looking at right now. The oscillators are pretty neutral. The momentum, I think, is shifting to positive. Overall, this week has been good. Outside of the Russia Black Swan event, I see like favorable tailwinds to us. And I do think we can actually move higher before we get too close to the end of the month and middle of next month, where that Fed rate hike will loom ever larger. So right now, I would say like for the next few days, buying's probably a pretty good idea. If you want to buy in, you probably want to buy in like today because we might actually go a little bit higher tomorrow and the next day. And that's because the Fed scare is over. It's not going to scare us until March. But as we get closer to March, definitely watch out for that. So that's the news for today. Let me know what you think. Like and subscribe. Hit that bell notifications button. Thank you and have a nice day.